right, Anthony, I'm excited to dive into your background story. You are the co-founder of Vinovest. I have a confession to make. I don't drink, so this is especially interesting to me. Oh, I think we lost your screen. No, you're back again. Good. So I don't drink. You are the co-founder of Vinovest, which is essentially an investment in wine and whiskey platform. So I'm a little curious. Maybe you can convince me to invest in this product, even if I don't drink it. But I'd love to learn more about the business. I can see some stats just quickly from your website. Over 100 million assets under management, 150,000 plus Vinovestors, so people who invest on your platform. Vinovest.co if people want to look at it as we were talking. 44 countries with clients from 44 countries and 650,000 bottles in our care. So let me start with a really simple question. How does this exactly work? Are you storing somewhere a bunch of bottles and then as a user of the platform, we can basically buy fractional ownership? How does it work?
Yeah, you're absolutely right. We store all the bottles within our custody. So anybody who comes on, no matter where they live, what country, right, if they have storage or not, we handle all of it. So it comes for them to ultimately sell, right? It's very easy. You don't need to ship it back to us, right? We already have it. And oftentimes the folks that we sell it to also have accounts in the same warehouse storage facility. So a lot of times it just moves from that side of the warehouse to the other side of the warehouse. And most importantly, because it's under professional care, that means the resale value is going to be high. Right? It's very similar to the world of, say, um, getting a car, right? They always say once you drive the car off the lot, it loses half of its value because you don't really know how the new owner is going to take care of it. Same thing in the world of wine and spirits, right? You could tell me you have the best seller in the world, you have the perfect storage conditions, but it's really a he said, she said type of thing. When we store it in professional storage facilities, we have third party auditors, insurers, right? They all come in and check to make sure that this wine is doing fine. And that's also something that the eventual buyer looks at. They want to know that the provenance of the wine is perfect so that they will pay the highest possible price for it.
Okay, can you give me a little lesson in what is considered a collectible or high value wine or whiskey? Like what's in your vault right now that's considered valuable?
Yeah, happy to. So we look at three main factors when we're looking at, collectible or investable wines and spirits. First is going to be scarcity. So this is something that is very, very important given that wine and whiskey, they're consumables, right? So say if a vineyard in France, every year they only make 10,000 bottles, but there's 20,000 people who want it, that's what we're looking for. And if you think about the pattern of global consumption, every single year that goes by, there's going to be bottles that are consumed from that finite 10,000 bottle collection from that particular year. So as the wine and whiskey matures and people prefer more mature wines and whiskeys, not only is the product actually changing and appreciating, but the demand is also rising, given the decrease in supply due to consumption. Right? You can't really undrink a bottle, or you can't go back in time and remake the bottle, even if it's the best bottle in the world. So that scarcity aspect is very important. Number two is going to be on the longevity. So not all wines are made to age. The stuff that you see in supermarkets is actually made to be consumed pretty quickly. And that all comes back to the intention of the winemaker, the style that they're trying to make. And we're looking for wines where the winemaker is intentionally trying to create a wine that can last 20, 30, 40 years. So that also aids that first point in the scarcity and the longevity coming into play. And then finally, it's going to be brand equity, right? So the wines that we're looking at are all considered luxury goods. Um, why does somebody pay more for a Chanel bag than a Louis Vuitton bag, right? It's really that sort of brand pricing power, and that's what a lot of these wineries that we work with or distilleries that we work with do very, very well, and their brands command a premium on the market. So those are really the three things. We also look at nerdier things like critic scores, right? Annual consumption data in different countries, even satellite and weather patterns to predict new harvests, social media sentiment. But at the core, it's really these three fundamental factors.
Okay, interesting. Uh, what would be the most valuable wine or whiskey you currently have in the vault?
Ooh, so we have a bottle of 1982 Domaine de la Romanée-Conti wine. So it's a Burgundy red wine, Pinot Noir, from one of the rarest vineyards in the world, that bottle is going to be fetching close to $50,000, if not more.
Okay, wow. So, you know, I'm used to asset classes that are similar to this concept, like I can invest in gold fractionally and the gold is somewhere in a vault. Masterworks has more recently been really popularizing this concept with art, and now you're doing it with wine and whiskey. In terms of like how should I apportion my portfolio if I'm going to be, say, including some investment in wine or whiskey? Um, do I just choose an amount and then just put it in your platform and you distribute it across various bottles, or do I get to choose? I want to put it in this bottle. I assume that's more for the connoisseurs who might know which are more likely to accrue in value over time. Is that kind of the level of detail I get?
Yeah, so I'll start with your second question first, where we do have those two options, right? So for folks who are really just looking for exposure into a new asset, they can just choose our managed product where we figure out what your investment goals are, what else is in your portfolio overall, and then also what your investment timeline is. And based on those factors, we can recommend you a portfolio of wines and whiskeys, and we'll do the picking for you, right? We'll acquire them, we'll source them, we'll store them, and it's pretty hands off. And I think about 95% of our clients are that way. They are purely looking at this as an investable asset. Many of them also don't drink, like yourself.
Okay.
For the connoisseurs, though, we have more of a self-directed product where they can actually pick and choose. It's an open marketplace, so they can place bids, right? They can buy on the market price. They can be able to build together a portfolio and sort of stock pick, as you will, their portfolios. And going back to the first question on how do you even think about this as an asset, I think it's useful to start with just the fundamentals of what wine does in terms of its performance. So because it is really closely correlated to just global consumption, the volatility that you see year to year, as well as the price increase that you see year to year, are really based on that and not economic factors. So for example, over the last 25 years, there's only been 3 down years, and the max drawdown each year has only been 13%, leading to an annual volatility of just around 3%. So if you compare it to, say, another store value like gold, right? Gold has probably 2, 3, 4 times that volatility over the same course of year, and has definitely had more down years, about half and half in terms of down years versus up years over that same time frame. So it's quite stable, right? So it's not something that would be that sort of high risk, high reward type of investment in your portfolio, right? That may be going towards your high growth tech stocks, your crypto, or maybe something else like that. This is occupying a space where it's more on the wealth preservation side, right? It's pretty difficult for a bottle of wine to go down in value significantly because there's always that consumption pressure, that demand that keeps a stable price floor. That also means you won't be getting 100% year-over-year returns, though, right? We're very steadily in the low double digits every single year, and that's our expectation moving forward as well. So I'd say when you are looking to allocate into alternatives, first of all, right, diversification is the key goal, but also folks are looking for correlation to the other assets that they are investing in. So for example, wine has traditionally had only a 0.012 correlation rate with the market, so virtually uncorrelated, and not correlated with gold, not correlated with real estate, which are typically 2 of the larger positions that folks tend to have as well. And then that return profile that we mentioned. So, up to the individual investor and how much they'd like to allocate. Some people just start with 1%. Some people build up their positions over time to 5-10% of their overall investable assets. But when you're into alternatives, right, it's really up to the end investor.
Okay. That's interesting. This is a totally new asset class to me, so I appreciate the info. In terms of when it comes time to sell, is this a case where, because I was interested to hear you say this before, that I can either just bring wines by the sounds of things, or bring my money and then you help me go and source wine that then is the wine I purchased, and it goes into the platform. So you obviously not only are a storage facility, you're a sourcing facility as well as an online platform. So therefore, I might have a bottle of wine that you help me select. It's in your vault, and then whatever it is, 10 years later, I'm like, it's time to exit. I need liquidity. what is the exiting process? Who's buying it? How fast is that, and so on?
So when we're exiting, we really base it on, what that initial goal for the investor is. So say if you're a 10-year investor, we are going to be selecting wines that we believe will be maturing, at or around that 10-year mark. It's very subjective in the wine world, when's the perfect drinking age for a wine, but we have that sort of, say, 3 to 5 year window where it's appropriate. When we're looking to exit, we handle that process in terms of having an open marketplace. So we have buyers on the platform every single month who are looking, and those folks are usually on the consumption side. So think of the wine enthusiasts of the world, the private collectors, auction houses, wine retailers, right, restaurant groups. So they're the ones who are buying it because at that point they're ready to drink, right? So they're wines that are really, at their sort of most desirable state. There's probably not a lot of them anymore since they've been aged, and a lot of people have consumed it over the past 10 years. And that's when you typically see the strongest liquidity in the market. It's compared to the stock market or other markets, it's definitely underdeveloped, right? We see a lot less trading activity, but part of our goal at Vinovest is to bring more participants online. Right now, still a lot of deals are done over WhatsApp, phone calls, handshakes, and we're trying to bring more of those onto our platform to increase the transparency of the platform and frankly give people an easier solution.
Okay, so just to clarify, let's say I log into Vinovest, it's 10 years or whatever, I just happen to need the cash. Do I just click a sell button at the platform level, and then at your level, you're then going to all these potential buyers and looking for an exit? Is that so? It's not going to be like there's not going to be other buyers on the platform who literally will press buy at the asset price that I've said I want to sell at, like a trading marketplace. It's not like that, or is it like that?
It's more like a trading marketplace. So when you're looking to sell, at any point, you could decide tomorrow, you can set a price that you'd like to sell it at. And once you do and confirm it, that gets blasted out to the marketplace. So for folks who do have alerts on or do have an existing bid on, they'll get notified that, hey, there's a new offer, right? So that's something that folks will sometimes just set really high limit orders. So they're like, hey, I don't really have a strong timeline in mind. Whenever someone hits this, I'm good to sell it. So sometimes we'll see people just do that as well proactively. And it's an open market, so oftentimes you'll receive counter bids, right? You can lower your offer, raise your offer, and really interact with the rest of the market.
Okay, so is it possible to day trade wine on your platform? Is that realistic or not?
While we do see transactions happening on the same wine every single day, I'd say that most of the wine buyers, right, the folks who deal with real volume are in the wine industry, right? So they've got their monthly buying budget, for example. So they'll come around, and even if they're peeking around the website and placing bids, they're really coming around once a month, for example, or once a quarter, buying a lot, and then working through those and then coming back again. So since the price of wine is also quite stable, not much price action is done intraday, unless there's some big news, right? Like a critic score rating comes out that same day, or LeBron James posting the photo on his Instagram. Those things actually do matter in the wine market. They move
Interesting.
the prices, and sometimes you see 15-30% price jumps within a day because a big critic upgraded the score or rated 100 points, and that's when you see a lot of intraday action. But I'd say by far and large, it's pretty rare. It's a long-term asset. People just want to buy and hold it and just wait for the aging process to do its thing.
Okay, wow. As you're saying this, I'm thinking this has to be one of the only asset classes where the exit may lead to the asset being destroyed, and that's the point. Like it'll be consumed.
Exactly. One's got to
Yeah,
enjoy it at the end of the day.
yeah. Is that the end game for all like alcohol investments, or really people will save some of this forever and they never intend to sell it, or it keeps trading, but no one ever consumes it?
I'd say in the vast majority, somebody's going to drink it. Right? Of
Wow.
course, there are bottles that are now, I still see some, not that we would hold, but at auctions, right? They're nearly 100 years old. That's very risky to drink a bottle like that, right? Who knows what's happened 100 years ago? I don't think there is anyone with strong record keeping for that long. So for those, it may turn into a piece of artwork, right? It's sentimental, it's memorabilia. Maybe it's the birth year of your grandparents, right? Or maybe a very significant year in history like 1945. So those almost become collectibles rather than consumables.
Yeah, wow, this is blowing my mind because I never think about buying a piece of art, and you're going to shred it one day, or investing
Yeah,
in a company and you hope it goes to zero at one day. That's obviously the opposite of what
yeah,
you expect. But I'd love to go back in time a little bit, Anthony, because obviously this is a technical platform. You're a startup. I was connected to you through Elizabeth Yin at Hustle Fund. I think you're one of their portfolio companies.
hmm
I know you also have, I looked a bit into your background. You've got more than just this one company in your past, but I would like to just spend a bit of time on Vinovest because I am curious the business itself. So, in terms of your interest in wine and whiskey, as an investor, as a consumer, when did that start? You personally, and I can see you've got some bottles behind for those watching on video. I'm
yeah,
not sure if those are investments or just your daily habit or not, but
yeah.
what's your background with this product?
Yeah, so I've always been fascinated with the world of wine and whiskey. In terms of my background, I grew up in Beijing and Hong Kong in the 2000s, and that's where there was a huge boom in French red wine importation and popularity. So it's always been something that was very fascinating to me. After my first exit and being able to then start to appreciate some of those wines at restaurants, it became more into the collection side. I wanted to be able to buy some of these bottles that were young and then be able to age them, hold on to them, and then eventually try them, right? Try the difference of what this, for example, 2010 Bordeaux tastes like in 2012 versus in 2014 versus like in 2016. So I'd start buying cases of wine and just save onto them and hold on to them and see what was going on. So it was really just a personal fascination that really started this whole thing.
So you have a first bottle that you bought as a collector as well? Like maybe you still have it, maybe it's right behind you in the video I'm watching. Is there something like that from your past?
Yeah, we've got a bottle from '09, which was the first bottle that I tried to collect, and it was something that I wasn't even of drinking age yet. It was something that my dad actually gave to me, and he was like, "Hey, this is a really great wine that I like. I've got a few cases when you're 18, like for you to try it, and then let's save it and let's try it every year, right? Let's see how it's different, and that could be a cool thing for us to do." And that was really that first bottle.
So did you, though, as an underage person, then did you also think how much is this going to appreciate in value? Like, did you think about that side, or was it just
Oh no,
about
I knew nothing about that
okay,
as
okay,
as someone who wasn't even 18. I wasn't even thinking of it. I was like, oh, that's cool. I get to drink alcohol with my dad. That was all. I didn't even think about the monetary or the financial component of this asset class until much, much later, and just looking at the value of my collection. Um, you know, there were online auction prices where I'd see headlines. I was like, wow. I pull up this bottle. I was like, I have this bottle. I bought it for 100. Now it's 300. What's going on here? Right? And that's what sort of spurred my more of a hobbyist interest and turned it into a professional thing and now a career.
yeah, okay. Well, take us to that point. When does the decision to actually build a platform, a marketplace around this investment class enter your world?
So this was all the way in 2019. So I'd founded and sold my first two companies. I was working in the cryptocurrency industry, so also in alternative assets. And at that point, if you're crazy enough to invest in crypto, you're investing in everything, right? We've we've made trades where we flipped an antique violin, for example. We were buying art, watches, cars, and just the group of traders that I was with, a lot of them were very, very into wine and whiskey. So that was what reinvigorated my interest. And because we were using a lot of data and technical signals to be able to trade on the crypto market, um, I tried and had the idea to do the same thing on the wine market. So we created a back tested model. My co founder and I, we then tested it, started putting some of our own capital to it, realizing that we were actually beating out the benchmark of the wine investment world, which is called the LiveX 1000. And then that's when we
Sorry,
decided,
just
hey,
what do
oh,
you
go
mean
ahead.
by beating out like, you mean your platform, you're making more money, or what does that mean?
So the benchmark that we track, so when someone says like, oh, wine went up this year, right? It's tracking a benchmark index called the LiveX 1000. So similar to your S&P 500 for the stocks, right? It's what most portfolio managers look to beat when they're in the business. So our model was actually beating out what the general market was doing. So with that market beating model, that gave us the confidence to actually start marketing it and start bringing more people into the fold, because we didn't know if we were any good at collecting or investing in wine on a professional scale.
Okay, so you're saying there was, what's it called? The Vino,
The
the
LiveX 1000
LiveX
is the
1000. That's a
benchmark.
wine specific listing of how people are, the general market, how it's trending and up or down.
Yeah,
And
that's
you're investing, it's like as if I was trading stocks myself versus the Nasdaq or the S&P 500 or
yeah,
something like that, right?
exactly. You're
Okay.
saying like I
Um,
beat the market this year, right? That probably means you beat the S&P.
okay, but then that just tells yourself that you're a good investor. It doesn't necessarily mean you're going to build a platform to trade, does it? So what's the connection there?
So we came at a crossroads. There were friends that were not into wine. I knew they wouldn't even probably spend more than $50 at the grocery store on wine. Suddenly they're like, "Hey, I've got $10,000. Will you invest all this into wine?" I was like, "Whoa!" Had people who didn't even drink who wanted to invest in wine, purely looking at it from the numbers standpoint. And we had a choice on whether to just start a wine hedge fund or create an open platform where more people could trade. And for us, the more exciting idea was the latter. And that's why we started Vinovest. We've got this more managed product, and now we have the open marketplace and trading platform as well on top of it. So that's our goal, is really bring more participants into the market, not only ones who had never heard of wine or whiskey investing before, but also the ones who had already been trading every day and were using very, very old fashioned tools or no tools at all to help them on their day to day business.
Okay, so I can see where the idea comes from. It's classic, just demand you're seeing in front of your face from friends, and it's a subject you're interested in. Um, I know we've only briefly touched about your background, and you know, I'd love to hear more about that. But maybe you can tie it into this question I have for you, because you decide you're going to build a platform and it's going to be a startup. Now, if you're a brand new entrepreneur, which you're not, then you don't know, do I raise investment? Do I try and self fund? Maybe you have no money, so you have to raise investment, or
Mhm.
maybe you're a coder yourself, you can try and code. So, could you set the scene for yourselves when you make the decision? We're going to start this business. I say we because I believe you had a co founder.
Yep.
Is one of you a programmer so they could create the MVP? Did you decide to get investment straight away because you had exits? I'm not sure if those exits were retire forever money, like you could put blow $1 million of your own trying to make Vinovest work, or maybe you could put a little bit in, but eventually you need investing. So maybe just set the scene where you are the day you decide to build this software.
Yeah, great question. So both Brent and I, we'd been founders before. We've had exits, and our company that we were working for, not as founders but just as early employees, had also exited. So we're in the fortunate position that we did have cash to be able to fund the business. And I think the main question
Sorry to
was,
interrupt, man. Would you just mind mentioning? Oh, I'd love to hear what those companies were just briefly, but
oh
all
yeah,
three of them.
so the first one was called Envoy Now. I started that when I was 18 in college, and it was a food delivery app for college campuses. So much like your Postmates or Grubhubs of the world, but we were focused on these college campuses, super dense markets, using only student delivery drivers who had those meal plan access, the dining card access, the ID access, to be able to get into buildings faster, right? So um, really, there was no new tech. The main thing was that we were just faster than Postmates and Grubhub every single time. And when you're a hungry college student eating a burrito, you look at the delivery times on your apps, right? One saying 30 minutes, the other saying 22 minutes. You're going to pick 22 nine times out of 10. So that's how we won. We ended up getting acquired by a larger food delivery app, and then they ended up getting acquired by Walmart. So now that business serves a lot of the local last mile delivery between Walmarts and college towns. And there's virtually a Walmart in every single college town in America right now.
Interesting.
So that was my
Okay.
first venture.
Now, were you financially free forever from that first exit, or for a little while? What was that? I always say, is it buying new clothes money, or buying a house money, or free forever money?
It was like I was now, fully financially independent, could start investing for the future, could start buying a house type.
Okay.
It was the type that gave me a good win, but it wasn't a home run by any stretch of the
Okay.
imagination.
Right.
Right. Maybe want to do it again, but bigger, and learn from my mistakes.
Okay.
So the second company really started more as a passion project. It was called Know Your VC, and this was at the time, if you remember, when in Hollywood there was the whole like Harvey Weinstein Me Too movement going on. up in Silicon Valley, there was the whole, you know, underrepresented founders or female founders coming out and speaking very bravely about a lot of these VCs who are doing kind of the same really shady things, um, in terms of abusing their power, you know, sexual harassment, racial discrimination. So for me, as someone who had raised money for my first startup, fundraising is tough, right? It's tough no matter how you slice it. But having all of those things to deal with on top of that, to me, just did not sit right. So I started a platform called Know Your VC, essentially like a Yelp or a Glassdoor for rating angel investors and venture capitalists. And that really took off because of the social climate at the time. At our peak, we were doing over 500,000 unique searches on the platform a month. We had tens of thousands of reviews. And it became a really useful tool, not only for founders to share their experiences, but where we found our niche was actually with VCs wanting to see what it's like to co-invest with this VC, or LPs who are evaluating VCs who are pitching them on how they actually were to their founders. And that one ended up getting acquired as well, by a small group. And that one now is called Rate My Investor, and it's still around today.
Okay.
So those are my first two ventures. And then I hopped into crypto at a company called Blockfolio, which was turned into the market leading portfolio tracking app in the world. We had over nearly nearly 8 million downloads by the time we got acquired.
And you were an early employee, so you had some vested
Yeah,
shares in that one too. Okay.
exactly.
All right. So maybe back to my other question. So we now know you came into this financially fairly, I wouldn't say billionaire, but certainly comfortable, and you could invest some of your own money. You clearly had some experience. I don't know, of all those businesses, though, were you more a marketing person, a developer? What was the
Yeah,
predominant
I
skill you
was I
gathered?
was always more on the growth and operations side, so I'm not
Okay.
technical. My co-founder Brent has a design background, so neither of us could actually build the website.
Okay.
But for us, the decision to raise venture money really came from being, did we want to raise a fund, which is, you know, a lifestyle business, you don't need to raise VC for that, or create a platform, right? And because it was more the platform play, that's when we decided, hey, we want to go big. This is something we want to dedicate the next 10 years of our life to, and really go aggressive. So that's why we decided to raise money. We were able to just prototype it ourselves, just with the first version, and kind of in a
How?
hacky way. Oh, go ahead.
How? How did you prototype it?
Unbounce page, you know, he designed the whole thing. We started collecting leads, spent about $300 in Facebook ads, started collecting leads. I was interviewing and calling every single lead, and we got about 250K in commitments of people who would invest in wine off of $300. So I was like, okay, this is
Wow.
worth building. So let's now find our first employee who was a developer. And
Um, Again, just to clarify though, the Unbounce page, it wasn't a working product. It was, hey, we're going to be building a platform to help you invest in
yeah, it
wine and
was just a
whiskey.
join the wait list, right? It was like,
Okay,
hey, wine
really? Oh,
investment.
wow.
Here's some charts, here's some data, join the wait list. And then I'd call everyone on the wait list, kind of see what they
All
were
right.
expecting out of the platform. Because we couldn't build any sort of user interface. We could give them wine, but then once we actually built it, ended up launching it 8 weeks later, and then started collecting in those commitments. And once we saw some of that traction, that's when we decided to raise a round.
Okay, so before we talk about the raising then, so you were able to hire your first employee who I presume built the MVP version because you need to start collecting money from all
Mhm.
these commitments, see if it's real. But on the flip side, you had to then go make sure there was product for them to invest in. At that stage, at the very start, if someone said, "I'm giving you $250,000 and I want you to help me invest," what do you do? How do you go buy that much alcohol that makes sense? And obviously, I know you're by that point you consider yourself, I guess, an expert in investing in this asset class. So, what happens next?
So we have the sourcing and the suppliers and the storage. The operational side, we all had it figured out. So we really just needed a secure way to be able to collect payments, create accounts, and have a way once the wine was in their possession to show the user that. So it was really all of that that needed to be built out, um, when we hired our first developer, and that's what we were able to show.
Okay. Um, I know I'm digging into the weeds a little bit here, but I am really curious. When you say you have your sources, is it a wine shop that happens to carry, like I could go to a collectibles for coins or collectible trading cards. You know, this I could go store to store and try and buy rare cards, for example. Um, but with wine, I feel like at this level, it's a little maybe more like art. So you're going to an art gallery version of a wine gallery. Is that the sort of thing? Like, how does it work?
So if you can, you're going straight to the winery, right? They're the source. There you can get the best pricing and the best condition of the wine. There's also marketplaces out there for wine, and you can just place a bid as well. So even before Vinovest started, there started to creep up some versions of online platforms that wanted to create more transparency, had a similar vision as us. So we also use some of those third parties, and many of them are membership only. You need to be licensed as an alcohol retailer to join. So they weren't really consumer versions of what we're trying to build.
Okay. I'm sure there's a story. We could have a movie about your life and you're driving from winery to winery trying to find this extremely rare
I'd
investment
love to do
wine.
that. There was no door knocking, fortunately, but I would have. If they didn't answer my call, I would have knocked on the
Yeah,
doors.
that's interesting. Okay, so take us forward with the actual software itself. So you have your sourcing, you have your location to store the asset, which I assume in itself is something like I always think of the Swiss. There's a cave in a mountain somewhere that's hermetically sealed, and there's fingerprint ID, like James Bond ID, to get in there. I don't know if it goes that.
It's
Am
it's
I
similar. I mean, one of them that's based in the UK was a refurbished World War One bunker. It's 400 feet in underground in the rolling hills of England. The royal family stores their collection at the same place as we do, and in COVID, right when the world shut down, that was probably one of the safest places you could be if you wanted to live there.
right? Is it multiple places or is it one? I guess as you get bigger, you need multiple anyway, right?
Yeah, we've got a few storage locations all around the world. So many in Europe, just because we want to be close to the places that we source from. But we still have some, in the United States and California, where Napa is, a big wine growing region as well. And then in places where we have a lot of key customers, so in Hong Kong and Singapore as well.
Okay. All right. So you've got this whole infrastructure. You know how to actually serve the market. Version 1.0 of the platform. What are you looking to build? Like what is an MVP for this?
So MVP V1 was the managed product. So our thesis was that we didn't want to target the wine collectors, right? They'd be really picky, wanting a lot of features. Wanted to target the folks who wanted to invest in alternatives, but just wanted an easy solution. So that's why we started with the managed product. It's quite similar to how the product experience still works today, where you come on board, right? We get you educated. You can hop on a call with one of our folks, and we start to learn about your goals. And then based on those inputs, our algorithm will start to create that portfolio for you. Then we'll go out and source those wines, bring them to our warehouse, and then once they land, you'll see the wines in your portfolio.
How much of that algorithm is truly digital? Like, as in, did you upload an availability of what you can acquire, and then the algorithms, taking I want high risk or lower risk, or like you said, how long, how many years do I want to invest? What's the amount I want to invest? And then it's sort of dynamically picking and choosing the right combination. Am I kind of on point?
Exactly. So based on all those inputs, it'll basically spit out an ideal list, right? And then I'll go out and contact our suppliers and see if they have those wines also at those target prices.
Okay. Is that hard to build? Or is that like the hardest part of the MVP to start with?
I think that's something that has always been refined. Every single quarter, we take a look at the performance, see how it's strayed from what the model is supposed to do, and always tweak it. So I'd say the early versions of it were not groundbreaking, but now it's turned to something that is proprietary for us, that is learning, getting smarter every single quarter, and is a key part of our success.
Okay. All right. So going forward, then you launch it. I assume you've got the not the wine collector, but you're taking this to, I guess, investors. How do you get your, I won't say your first customers because you got that from your Unbounce campaign, but how do you get to the next level of growth?
So for us, it was a lot of education, right? Most folks don't even know that you can even invest in wine or whiskey. much less the returns, much less how it should fit in your portfolio, and then Vinovest being what we think is the best way to do that. So it was a lot of PR, a lot of content, education, SEO, and that still is a really big part of our acquisition mix. And then we'd be using our performance channels, our Facebooks and Googles of the word, to A, retarget those folks who were visiting our site, and then B, also look for those key search terms with high intent. And that's still a part of our mix today. We do all of that. We work with newsletters, we work with podcasts, and we really want to just spend time educating folks that, hey, wine investing exists, right? It's no longer just for that one wine collecting nerd that you may know in your friend group. And it's a lot easier than you think to get started.
Okay. So if you fast forward to today, is it very much the same thing? Like you're just looking to, every time you get new customers, then you go acquire more wine, therefore your inventory grows, your assets under management essentially grows. Maybe, I don't know if it's not that many years, we're talking 4 years now, roughly, I think, since you started this. So you're still not like you're up and running, but you've got some years to go still, I assume, before you'd consider an exit.
Yep.
Um, what I'm trying to ask you here is like, what has been the hard part of this, even to get to this stage, and what's next in terms of what are the challenges to grow to whatever the next level is for you? Because I don't really know, looking at your numbers, I don't know how much of a slice of the pie you take. So how big is your team? What stage you're at in the growth. So any insights to all of that, I'd love to hear about it.
Yeah, so our company's post Series A. We've raised nearly $20 million to date. Our team is 20 people, all around the world. So we've got our wine buyers in France, to our logistics managers in the UK, I'm currently in California. Our VP of operations is in Michigan, so we've got folks everywhere. And I'd say the hardest thing for us has really been to combine the offline part of the world, the wine, the logistics, the moving around, with the online experience that we're looking to deliver, right? Because to your point, it is not like buying a stock where it's just, a digital piece of information, or gold where it's in a vault and fractionalized and securitized. We're moving full bottles, right? And some investors, they want to drink them, so we send it to them, right? And sourcing all around the world and having clients in now 44 different countries, right? There's laws and compliance that we need to deal with in every single one of those countries, and everybody regulates alcohol differently. So that has been a whole new world of education for me. And I think it's something that now we've started to wrap our arms around and feel comfortable scaling on. And that, I think, having that strong foundation now and knowing what our key compliance is and having that all in order allows us to be able to feel more comfortable growing on the top line side, and be able to be like, all right, if we do accept, 10,000 new investors, another 100 million overnight, we can actually confidently take that in, right? We wouldn't be able to do that 6 months ago. We'd be like, hey, we actually need to turn away money at this point because we're not ready to scale. So it was really about getting to a certain phase and kind of like re-upping and kind of fixing all the bandage solutions and turning into a real solution, and then be able to gear up for that next level.
Okay. So if I came with $10 million right now and I said, buy, and I said, broad portfolio, what happens behind the scenes? There's a bunch of people scurry around Europe and California to try and source what I need, and then you tell me it's all been purchased at some point? Is that would be my experience?
Yep. So with $10 million, we'd give you a 90-day deployment plan. We'd be getting you wines and whiskeys from different regions, different ages, to give you different exposure as well. So that would ensure that over the course of your experience with us, you have exits that are happening 2 years from now, 4 years from now, 6 years from now. We want to ladder it out to make it so that when you're entering the market as well as exiting the market, it's smooth and gradual, right? So that's our strategy. And because of also the seasonality and the availability of wines, we also want to make sure that you can get exposure to different regions over the course of months, rather than just flood the market and buy a bunch of the same thing on day one.
Okay. And if I only had $10,000, I guess the strategy would be a little bit simpler. I'd be buying maybe 1 or 2 bottles. Would that be likely, or?
Yeah, we would still want to diversify you, but of course with a smaller investment amount, we are limited, right? We wouldn't want to put a $9,000 ball in your portfolio and have that take pretty much all of your exposure. We may buy you 3 to 5 cases that are maybe $1,000, $2,000 each, and still give you that regional exposure just on a smaller scale, and that can be deployed within a day, right? We regularly process millions every single week to be able to move in and out of our systems.
That's very cool. Take me back to the financing part of this, the fundraising. What you sound like you said you raised almost at the start. Was there resistance? Were people eager? I'm thinking 2019, you were probably still in this joyous period for raising funding, so it wouldn't have been like as hard as it might have been in the last 12 months. Was there a lot of yeses straight away?
So I think what I first did was go to my previous investors that backed me in my first company. Right, that helped us get a lot of good momentum for our seed round to then be able to ask for intros and get the whole thing done. Fundraising is never easy, no matter how many times you do it. So even with the seed round, I think I took maybe 160 meetings over the course of 4 weeks, something crazy like that, and was able to raise a $3 million seed round. Series A was actually a lot quicker just because there's less options for a lead than at the seed round where you can do a party round or take a lead. So Series A was a lot more focused. That one was wrapped up in about 3 weeks. Still took a ton of meetings during those 3 weeks, and for me, I treat it like a race. Right, I'm prepping a month beforehand, clearing out my schedule, booking out meetings a month in advance. I'm also making sure I'm sleeping, making sure I'm like physically healthy for it because it's grueling, right? Especially in that time, everything was on Zoom, so you can have more meetings in a day too. Right? You physically can take 12 meetings in a day and just be sitting in front of your screen, which is not good for you. Um, and I think the last thing was just also making sure the team is prepared for me not being there for the most of the day. Right? I'm in and out of meetings. Of course, I can check emails and Slack when things end early, but knowing that the business needs to keep growing and prepping them for that. So even though the actual process only took 3 weeks, there was, I'd say, about 6 to 8 weeks of prep to make that process really efficient so I could get back to building the business as fast as possible.
Makes sense. Last few minutes, I know we've got to run soon. You actually have a background as an angel investor as well, and you've sort of sat on both sides of the fence since we're talking about fundraising here, and you've had exits. So you've gone from founder to exit, angel investor, back to founder, back to raising funding again. Can you tell us a little bit about your overall view of venture investing? I don't know if you've had exits from your angel investing yet, but clearly you're pro getting investment and you're doing it for your current company. Um, it is something you see as the best pathway for a company like yours.
Yeah, well, I still wouldn't consider myself a pro. I always get humbled every single fundraising process. But on the angel investment side, the key reason I do it is because I would not be where I was today if someone didn't take a bet on a 18-year-old with zero experience for their company. So for me, it's really a way of staying connected to the startup community. I know that the numbers don't suggest that you'll make money over the long run. I have had 2 exits, thankfully, but for me, it's supporting people who I believe in. It's giving back to the ecosystem in the ways that I can.
And then as a founder, again, you never hesitated to go the funding VC route?
I mean, my second company, Nuri VC, I didn't raise any money for. Right? I knew it would not be a VC $10 billion company, so I was like, hey, I can just do it myself and bootstrap it. So I've done both, and I think it depends on your commitment. Right? If you're looking to start a business and exit it in 5 years, that's not a VC business. That's most likely a lifestyle business, and you can bootstrap it. You can make profits along the way and run your own ship, which is great. Right? If you want to take the VC route, it's a serious commitment. It's something that my co-founder and I talked a lot about, about both of us being on both sides of the table before on the pros and cons, right? It's added pressure. You have other people's money that you're caring for. This business also has other people's money that we're caring for in a different way, right? So it's something that we had to have alignment on day one. We can't just start a business and decide if we want to raise VC or not, or just do it because it's sexy.
Wow, yeah, I know it's always a big decision, and I haven't for a lot of reasons like you're talking about,
Oh
and
yeah.
handling other people's money. But I do angel invest, and I love it too. So um, let's start to wrap up the call. You talked about just then, a lifestyle business you might be thinking about exiting in 5 years, where I'm sure with Vinovest, you took on venture funding. Your goal is unicorn, I'd say, as a minimum.
Yeah.
Um, this is a fairly, I wouldn't say new industry, like the idea is not new, but I feel like these kind of trading platforms for alternative investment products are fairly new. Like there's more popping up. I think Masterworks certainly was the first one I kind of heard of that certainly did a lot of
Hmm.
advertising, went out there a lot. And then now I've seen the trading card ones, the sneakers, there's so
Oh
many
yeah.
different things people buy, buy and invest. Um, is this like, is your next, because you're 40 years old, so your next 3, 4, 5, 6 years, you're just trying to get to that number and exit, or do you love this business model? And obviously you love the product itself. This could be your rest of your life business. What are you thinking about the future of Vinovest?
If I wasn't doing Vinovest, I would still be thinking about ways to invest and build wealth, and I'd still be looking for great wines to try. So this has a really great lifestyle fit with what I like to do. I can't say if it's a rest of my life type business, but it's a 10-year commitment that we started on. Right? We're still on year 4. We're not even halfway there, and we've got a lot of room to grow. Still, most people don't even know wine investing exists. So we have a work cut out for us.
Yeah, I can imagine the education part of this is a big part of it,
Oh yeah.
and the experience with a platform like yours is such a nice way to get started and dip your toes in. What is the minimum starting point? I don't know if you heard my last line there, Anthony. Came through. What's the minimum amount to invest in?
So on our self-directed side, there's no minimum, so you can find bottles on our platform for even under $100. On the managed product side, our wine minimums are $1,000. The whiskey minimums are 1750.
Okay, wow, yeah, really easy starting point.
Yep.
Okay, one last question, Anthony. For those who are hearing your story, especially as a multiple founder, and a person who chose to go back into a venture-backed company even after having a fairly successful couple of exits, what do you suggest to people in terms of making the decision, A, just to, start a business, and then B, whether they should consider lifestyle venture investing, or sorry, I should say VC, getting VC investing in their own company. And I'd love even just a little bit of thought about someone who's very interested in something very similar to you, as in they have a passion for something that might be considered collectible. Is it a business model that I don't say it's easy. I don't think any business is easy, but is there a lot of opportunities to start marketplaces, you feel, in collectibles, tradables, and investable products that are not traditional?
I have a strong belief in verticalized marketplaces, especially for these types of collectibles, because there's so much specialization, right? The watch industry is completely different than the wine industry, completely different from rare cars or coins or antiques, right? There's so many nuances, and because of that, I think you can really create a strong brand in your niche and your vertical. I've seen other companies do the whole broad approach where they offer a little bit of everything, but then you're just not good at everything, right? You're a jack of all trades, master of none. So I do have that belief. That's why in Vinovest we're only going to be focused on alcohol. We've been approached for other things, precious metals, diamonds, art, even.
Hmm.
And to me, that's straying from my expertise and our focus. And I think when it comes to the decision of lifestyle versus VC, right, I think it's something big, right? If you have a partner, it's definitely something that you have to talk to your partner about, because it's a very, very different 24/7 versus um, if you do lifestyle and VC, right? And there's pros and cons to both.
All right. So Vinovest, Vinovest.co is where you can go and actually use the platform we've been talking about. Anthony, are you hiring right now? Anything else you want to shout out before we end the call?
Just a shout out to Elizabeth for helping us get connected. Besides being a supporter and investor in Vinovest, she was actually one of our first investors in my very first company over 10 years ago. So back when
Really?
she was a
Wow.
partner at 500 Startups, I was the annoying kid who was about to drop out of college and was bothering her with a million questions while we were going through the accelerator program. So shout out to Elizabeth.
Yeah, and it's amazing that you were so early to this food delivery world that is obviously massive now with DoorDash and Uber Eats and Postmates and everything. So that must have been an exciting time. You must have had a lot of attention on you when that company was going. But yes, shout out to Elizabeth. Thank you for the connection. Anthony, good luck with the future of Vinovest. I'm definitely going to dive in and take a look. Um, as I said, I don't drink, but I like money, so why not look at other options for
Exactly.
investing? Thank you for your time.
Thank you very much. It's been a pleasure.